They tell you that gold is the ultimate insurance, the asset that saves your skin when the dollar collapses. That's only half the truth. Gold is for preserving massive wealth. It's too big, too expensive, and too clunky for day-to-day use. When the global economy gets choppy, are you really going to break off a sliver of a gold bar just to buy a tank of gas or a bag of rice? You need the money of the common man. You need the universal barter tool. You need silver. I'm going to show you the compelling financial and practical reasons why silver is the single most powerful survival asset you can own, and I'm giving you my exact 3-step action plan to start securing your physical stack today. This is not financial advice. This is pure survival strategy. Let's get into it. Before we go deeper on silver, you need to understand why gold fails as a practical survival asset. Gold's purpose is long-term wealth preservation. You save it, you hide it, you hold it through the storm, but you don't spend it. Not in a collapsed economy where small transactions are everything. Here's the scenario that exposes gold's fatal weakness. Imagine the currency has collapsed. The dollar is worthless. Supply chains are broken. You need to trade for essentials. A tank of gas, antibiotics, preserved food, batteries. You walk up to someone willing to barter. You pull out a 1-ounce gold coin worth $2,900 in today's market. They have $50 worth of supplies. What happens? Nothing. The transaction dies. Why? Because you can't make change with gold. You can't break a gold coin into fractional pieces on the spot. The other person doesn't have $2,850 worth of goods to balance the trade. Even if they wanted to help you, the math doesn't work. This is the liquidity trap of gold in a real crisis. The price of gold becomes irrelevant if no one can give you change for it. You're holding an asset that's too valuable to use. What you need is a medium of exchange that people can transact with immediately, something that comes in denominations that match the actual value of day-to-day survival goods. That's silver. Now let's break down exactly why silver is positioned as the #1 barter asset when economies collapse. The barter sweet spot, and why the price just exploded. Here's something that should wake you up immediately. As we speak right now, silver is trading at around $95 per ounce. Not the $25 to $35. It was just a short time ago. Not even $50. $95, that's a massive spike. And it's not random, it's a signal. People are waking up to what's coming. Institutional investors, foreign governments, and smart money are flooding into silver because they see the same crisis indicators you're seeing. When silver moves this fast, it's telling you that the wealthy are positioning themselves before the panic hits the mainstream. But here's the critical point. Even at $95 per ounce, silver is still in the perfect price range for real-world transactions. Need a tank of gas? Trade 1 ounce of silver. Need a week's worth of canned food? Trade 1 ounce. Need medicine, ammunition, or hand tools? Silver gives you the exact fractional denominations to make those deals happen. Think of silver as the replacement for dollar bills in a cashless, collapsed economy. Just like you wouldn't try to buy groceries with a $10,000 bill, you wouldn't use gold for daily survival transactions. Silver is the everyday money. This is why, throughout history, silver has always been called the money of the common man. It's the metal that circulates. It's the metal that gets used. Gold sits in vaults. Silver moves through hands. The supply crisis, nobody's talking about. Now here's where it gets really interesting and really urgent. Unlike gold, which can be mined directly from gold deposits, silver is primarily a byproduct. About 70% of silver comes from mining other metals: copper, lead, zinc. You don't just dig a silver mine and pull out pure silver. You mine for industrial metals, and silver comes along for the ride as a secondary product. This creates a catastrophic supply problem that gold doesn't have. When demand for silver skyrockets, like it's doing right now, the mining industry can't just ramp up silver production. They're locked into producing whatever industrial metals the economy needs. If copper demand is flat, silver supply stays flat, even if silver demand is going vertical. This is why silver prices are so explosive. The supply is inelastic. It can't respond to demand spikes. And right now, with industrial demand from solar panels and electric vehicles, combining with investment demand from people preparing for economic collapse, we're hitting a supply crunch that has no quick solution. Gold miners can increase gold production if the price justifies it. Silver production? It's cuffed to completely different industries. That $95 price tag? It's not the top. It's the beginning of a supply-demand imbalance that could send silver significantly higher as more people realize what you're learning right now. Here's something most people don't realize. Silver has intrinsic utility that gold simply does not. Silver is consumed by industry at massive scale. It's used in electronics, solar panels, medical devices, water purification, batteries, and conductors. Every smartphone, every computer, every electric vehicle, they all require silver. Here's a wild fact that puts this in perspective. NASA uses silver in space equipment because it's the best thermal conductor and reflector known to man. The Apollo missions had thin layers of silver coating on their visors and instruments. When you're engineering for survival in the vacuum of space, you choose silver. That same principle applies when you're engineering for survival in an economic vacuum. This industrial demand creates a fundamental floor under silver's value. Even if the financial system collapses, even if currencies fail, silver will always have utility because it's a critical material for technology and infrastructure. Gold? Most of it sits in vaults or gets turned into jewelry. It's beautiful, it's rare, but it doesn't do anything. It doesn't have the same consumption-based demand that silver has. This is a critical distinction in a survival scenario. An asset with real-world industrial utility will always find buyers. An asset that's purely decorative or speculative, that's a gamble. Silver gives you both financial protection and practical utility. That dual purpose makes it the superior survival asset. Now let's talk about the wealth building component, because silver isn't just about survival bartering, it's also about financial opportunity. The gold to silver ratio, how many ounces of silver it takes to buy 1 ounce of gold, has swung wildly throughout history. Right now, even with silver at $95, that ratio is around 30-1, meaning it takes about 30 ounces of silver to equal 1 ounce of gold. But historically, that ratio has been as low as 15-1. And during crisis manias, when people panic into precious metals, silver prices rocket upward faster than gold because the silver market is smaller and more volatile. Here's what that means for you. If you're holding silver and the ratio tightens further, if silver closes the gap on gold, you see massive percentage gains. Silver becomes the leverage play on precious metals without the downside risk of paper assets. In 2011, silver hit nearly $50 per ounce, while gold was around $1,900. That's a ratio compression that made silver stackers significantly wealthier in a short period. We're watching a similar pattern develop right now, but this time the fundamentals are even stronger. And here's a historical pattern that should get your attention. In Weimar Germany during the hyperinflation of 1923, a single silver coin could buy an entire week's worth of groceries. Meanwhile, people were literally using stacks of paper marks to fuel their stoves because the currency had become more valuable as kindling than as money. The people who held silver, they survived. The people who trusted paper, they starved. The takeaway: you get better potential for financial gain and superior survival utility with silver. Gold might preserve your wealth. Silver can multiply it while also functioning as your day-to-day barter currency. That's the ultimate combination. Now that you understand why silver is the ultimate survival asset, let's get tactical. Here's your exact 3-step action plan to start building your silver stack today. Step 1, focus on the junk, 90% silver coinage. The first thing you need to acquire is what the precious metals community calls junk silver. Don't let the name fool you. This is some of the best silver you can own for barter purposes. And junk silver refers to pre-1965 US dimes, quarters, and half dollars. These coins were minted with 90% silver content before the US government debased the currency and started using cheap metals. Why are these coins critical? 3 reasons. First, they're widely recognized. Everyone in America knows what a quarter looks like. You don't have to explain what it is or verify its authenticity in the middle of a crisis transaction. Recognition equals trust, and trust equals successful trades. Second, they're highly fractionalized. A single silver dime is worth roughly $8 to $10 in melt value at today's prices. A quarter is worth $20 to $25. This gives you the ability to make very small transactions, buying a loaf of bread, a few cans of food, a box of ammunition. You can't do that with 1-ounce rounds. Third, they're historically proven. During past economic crises, junk silver has been the go-to medium of exchange because it combines government recognition with fractional utility. Here's a fascinating piece of history. During the Great Depression, silver coins were so valuable that people would hoard them and spend paper bills instead. The government noticed this pattern, and it's one reason they eventually removed silver from circulation entirely in 1965. The population instinctively knew that metal held real value, while paper was a promise that could be broken. Your action step: find reputable local coin dealers or online bullion retailers. Start acquiring rolls of pre-1965 dimes and quarters. Target at least $100 face value to start. That's roughly 70 ounces of silver content and gives you significant transactional flexibility. Junk silver is your small denomination, high utility barter stack. This is what you'll actually use when you need to trade for everyday essentials. Step 2, start with the rounds, 1-ounce bullion. Once you've built your junk silver base, the next step is acquiring 1-ounce silver rounds and coins. These are your medium to large transaction tools. The most recognizable and trusted options are government minted coins. American Silver Eagles, Canadian Maple Leafs, Austrian Philharmonics. These coins carry government backing, have anti-counterfeiting features, and are universally accepted in precious metals markets worldwide. You can also buy generic 1-ounce rounds from private mints, which are slightly cheaper because they don't carry the government premium. These work perfectly fine for bartering and wealth storage. They're pure silver, just without the official government stamp. Why 1-ounce rounds matter? They're the most liquid form of silver. They're easy to store, easy to verify, and easy to trade. If you need to acquire higher value goods, tools, bulk food, firearms, fuel in large quantities, 1-ounce rounds give you the purchasing power to make those deals without overpaying. Think of these as your $100 bills in the new economy. Junk silver is your $5, $10, and $20 bills. Together, they give you a complete transactional system. Your action step: acquire at least 20 to 50 1-ounce rounds or government coins. Yes, at $95 per ounce, that's a significant investment. But consider this. By the time the mainstream wakes up to the supply crisis, premiums could add another 30 to 50% on top of spot price. Space out your purchases if needed, but make consistent progress. Set a goal, 1 ounce per week or 5 ounces per month, and stick to it. This is your core stack. This is the silver that protects your purchasing power and gives you negotiating strength in a collapsed economy. Step 3, secure your stack. Safe storage strategy. Here's where most people make a catastrophic mistake. They acquire their silver, and then they store all of it in one location. That's a single point of failure. If that location is discovered, compromised, or destroyed, you lose everything. The correct strategy is geographic diversification of your physical stack. Here's the rule. Divide your silver into at least 3 separate, secure, hidden locations. Location 1, your primary residence in a well-concealed, fireproof, and waterproof container. This is your accessible stack, the silver you can get to quickly if you need to make immediate trades. Keep roughly 30 to 40% of your total stack here. Location 2, a secondary secure location that only you and possibly one trusted family member know about. This could be a buried cache on property you control, a hidden spot in a secondary building, or even a safe deposit box if you trust that system. This is your backup stack, the silver that survives if your primary location is compromised. Store 30 to 40% here. Location 3, a deep storage location that is geographically separate from the first 2. This is your insurance policy against worst-case scenarios, evacuation, natural disaster, or long-term displacement. This is where the remaining 20 to 30% goes. Critical details. Each location should have waterproof, airtight containers. Pelican cases work, ammo cans work, PVC tubes buried underground work. The goal is protection from moisture, fire, and discovery. And here's the non-negotiable rule. Tell no one, not friends, not extended family, not co-workers. The moment someone else knows where your silver is, you've created a security vulnerability. I will say it one more time. Tell no one. There's a reason old pirates buried treasure on remote islands and drew maps with cryptic clues. It wasn't just for adventure, it was operational security. Loose lips sink ships. In a crisis, people get desperate. Protect your stack with silence. Let's lock this in. Silver is the ultimate survival asset because it solves the fatal flaw of gold. It's usable for real-world transactions. It has intrinsic industrial value that's driving unprecedented demand. It offers financial leverage with a supply constraint that can't be fixed quickly. And it's the proven medium of exchange when currencies collapse. Your 3-step action plan. Step 1. Acquire junk silver, pre-1965 dimes and quarters for small transactions. Step 2. Stack 1-ounce rounds and government coins for medium and large trades. Step 3. Secure your stack across 3 separate hidden locations. Start today, not tomorrow, not next month. Today. Because the $95 price tag you're seeing right now is a warning signal. When the broader public realizes silver can't be produced fast enough to meet demand, when the supply crisis becomes front-page news, premiums will explode and physical silver will simply vanish from the market. The survivors are the ones who positioned themselves early. If this video just gave you the silver strategy you needed, smash that like button and subscribe for more no-nonsense survival finance. Drop a comment. How many ounces are you stacking this month? Stay prepared, stay sovereign. I'll see you in the next one.